Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody is having a great session. As I was telling everybody in the chat room, I'm licking a few wounds because I was long. I was long some dollars yesterday. Fortunately not huge, but still. Because I wanted to add. That was my whole intention, is to be in some small positions and if the dollar reversed to really aggressively add. And I didn't, obviously didn't. I just got out of the positions I had. I had a lingering US dollar long, which was the US dollar Mexican peso. I got stopped out of the Norway. I got stopped out of the dollar Canadian. Fortunately, my dollar Mexican peso was my largest position. So that helps because if you look, let me just show you the reason why. I mean, the dollar Mexican peso has still been diverging and creating higher lows, right? Low, here's your low, higher low. This is on a daily, weekly, monthly basis, right? Daily, weekly basis rather. US dollar Norwegian krona was already breaking down. So my position was like very minor in this because I knew we were below support. And the dollar Canadian was really weak. And I'm like, okay, I don't want to be in a big position in the dollar Canadian either. And so my dollar Mexican peso happened to be my largest position, which I just exited this morning, just so you guys know. Well, if you look at the patterns in play, I also closed out there, but I got out of it at 2001. Obviously a little early, but that's fine. Because I still, if you're not in the chat room, I still own the Euro Mexican peso, and this is one that I do own right now. So just letting you guys know, this is kind of my de facto long or short Mexican peso play is just long Euro Mex. Just because if you look at like a daily chart, it's holding support really well. So I'm not worried about it. And, I think he'll play back up here no matter what the environment is. That's what I think anyway. So one of the things I want to, discuss is the obviously the breakout in the euro or the breakdown in the dollar right now, because when you put all of this together, when I say put all this together, what I mean is, you think about what the dollar's doing, okay? And we've had a massive move. When you see, the euro rally 400 pips in like, a few weeks, like 3 weeks, 3 or 4 weeks, we go straight up in this channel. That's a pretty aggressive move, right? And I'm sitting there thinking, okay, maybe it's time for a pullback. But at the same time, when you look at where stocks are at, and you think about what David just said on the FACE webinar, and it's something that Steve's been talking about, and I continue to believe that's going to have to be ultimately the outcome of the market, is going to have to be a shakeout style move, and that's going to be a capitulation higher in equities or a blow off top. And I've always felt that way because of the way we just continue to grind higher. But when there are zero pullbacks in the markets, you've heard me say this. You've probably heard a lot of people say this over the years. And I'm just going to say this and just get it out there. When you go straight up in a market, it never ends well, ever. It doesn't, right? Wow, gold's getting smashed right now. Holy shit. I mean, look at the yen pairs. Gold's just getting absolutely clobbered at the moment. Dollar Mexican peso is really still running. like I said, I'm long Euromax, so that's fine. But wow, look at what's happening in gold. I mean, that's a big move. $15 slide in gold, just like that. Woo. I know it's
and for some reason you only see these moves to the downside, right?
yeah, but I guess it makes sense, Steve, when you got the dollar yen and all the yen pairs ripping, right?
Yeah, but still, I mean, there are other times that using the same logic would make sense for it to be $15 higher within 2 minutes, but it usually isn't. It's
Look,
the opposite
somebody
that
had a
happens.
few billion to sell and it sold it in one go. Come on, what's wrong with
Yeah,
that?
exactly.
Yeah, right. Screw liquidity. Just hey, Stella, welcome back. By the way,
Hey.
But Steve, Stellius, you missed it, but we had a really great interview, and I like David. I don't necessarily share all of his beliefs.
David who?
Hunter.
Okay.
Yeah, he's a portfolio manager, and Dale had it was a really good interview with him, and he's calling for a deflationary bust really over the next year. And I think if I understood him correctly, he was looking for like an 80% correction in equities from wherever we go.
Holy moly.
Which now, let me just point something out. I know I've said this in the past.
I'm a buyer 80% lower, by the way, telling you in advance.
Aren't we all? If just so you guys can see it, let's go to the Nikkei. I think this is the one that gives us all the data. Okay. This is the Nikkei. There's the top, December of 89, right? Shoot. I need to fix this. Where is it? Measure. That was an 83% decline by the time it was all said and done. And how many years later was that? I mean, that was, we were
a healthy one.
like 20 years later, right? And even the initial decline, I mean, if you think about that, the initial decline was a 63% correction over the course of 3 years, something like that. Look, I hate to be I just don't like being a doom and gloomer, but I mean, and like I said on today's FACE webinar, I know the situation is different. It's different, like, different dynamics that were moving in Japan at the time. But I do believe that the charts can have similar outcomes when you have a parabolic move that we've seen in U.S. equities. And I fully believe, and welcome your thoughts here, and then I'll get to analysis. I fully believe that what the Fed and other central banks are spending right now is at the detriment of our future generations. I feel
there's no question about it.
I feel very sad about what world financially I'm going to be leaving my kids over the next, 10 or 15, 20 years. So I just needed to throw that out there. So
yeah, there is no question about it, because if that was not the case, that would mean that it took us thousands of years to figure out the simplest secret to prosperity, which is printing money.
Yeah, right. I mean, that's it, right? You print money and there you go.
Yeah. I mean, if it was that simple, first of all, let's not forget, it has been tried several times. Not a single time it hasn't ended in tears.
Right.
Yeah, this time is different though.
yeah. Of course it is.
You know what I'm trying to do here? Let me just show you something. This move. Let me just. I'm going back to the 1987 ish. Do you know what this move is very reminiscent of?
The COVID move.
The COVID move, right? That this looks exactly like I'm gonna go ahead and just let me just capture this for a second. Give me a second. Oh, shoot, that's not what I wanted. Sorry, I'm trying to figure out how I want to do this. Okay, so I'm going to keep that, and let's go over to the S&P and go over to nowadays, right? So this move right here, where is it? Okay, so this move right here is very similar to the COVID move that we saw right here, right? And then we reversed. And so if my assessment's correct, we're somewhere around right around here, right? And that means that we could go parabolic, or maybe we are in the process of going parabolic, but it's happening ahead of, like, you know, what David was just saying. And I'm not saying that he's right, and you know, that's the gospel, and you know, that's exactly what's happening. But I'll tell you that these moves are unprecedented. Stelios, you've been around a long time. Steve, you've been around for, you know, a long time as
15
well.
years.
I mean, huh?
15 years I've been around in the markets.
Yeah, I mean, these moves are unprecedented, and so they're not going to end pretty. I just don't believe it. I just don't believe that we rally in such a fashion and then just do this.
Yeah, I agree. They won't.
I think we are exaggerated, and it's not just because I'm looking at the S&P going, oh, well, that's just the S&P. No, it's the other asset classes that are moving along with it, like the Bitcoins, the crypto craze, you know, everything else. The everything is moving type of moves. So anyway, I just, you know, I think it's important to be really careful here and be extremely on guard, and that's why when yesterday, it's like, you know, I was long some dollars, hoping that maybe Powell might change his tune, and I really wanted to be aggressively long the dollar if we broke out of this channel. It just didn't happen, and now it looks like, you know, the dollar is going to be punished, and that is really the only way for the dollar right now, is if this is correct in stocks, which, you know, I don't know if you guys have noticed, stocks don't go down. Right. So if we're going to continue in this path where stocks just don't go down, and then they maybe, because, you know, it's just happening, we start
It's blasphemy
accelerating.
even implying they would.
Yeah. Well, but you know, jokes aside, it's like when you get to a situation where they never pull back, they only will accelerate at a much faster pace. What won't happen, and I can guarantee you this, what won't happen is we won't see a trajectory like this, like where there are no pullbacks. What happens is it starts to bend because everybody shorts and they're forced to squeeze immediately. So what ends up happening is you get a bend that looks like this, right?
Yep.
Because you move up like this in a constant fashion only for so long before it starts forcing people long.
And then you get it. Then you get it up when there are no more people that are willing to sell.
Exactly.
And people that are already invested are invested almost as much as they can. So there is no real new money that can enter through and keep this momentum going, because of course nothing can keep on going parabolically, because, you know, the fate of a parabola is to end in a dramatic way always.
And to be perfectly honest, I thought this is where we were at pre-COVID lockdown.
We might have been actually in that trajectory if we didn't get COVID.
Yeah, that's the thing, is I think we were on the cusp of, and you guys have heard me when we were, you know, doing those webinars at the time. I was like, we were on the cusp of, doing some sort of blow off top, and then COVID happened, and all COVID did is just, extend the cycle longer and higher because of the, liquidity that's been provided to the market by fiscal and the Fed governors. Anyway, I'm sorry. I got to get analysis in. Steve, I'm sure people want to hear your take too, and same with you, Stelios. So let me go quickly do the analysis, but I just kind of wanted to share with you guys what I was thinking here. And Steph, who's probably listening in right now, she had asked earlier about like, oh my gosh, you missed data, or do we not cover that on the webinars anymore? And frankly, without Stelios here, I forget about things. So yeah, no, but I really had this on my mind, and kind of, after yesterday's FOMC, I kind of wanted to talk about these things, and then I spaced it actually because I was, wanted to get what I was thinking out into the webinar sphere as quick as possible. And that's kind of the thing about the morning edge, is I used to spend a lot of time just talking about, like, ranting about, what's going on and my thoughts in my head, to give people a perspective of how we're thinking about things. So anyway, let's talk about the euro and where we're at right now. I look at the euro dollar, and as long as we stay above this trend line here, you have to stay bullish. It's just kind of like yesterday. We were like, okay, as long as we're above 120.55, well, that number's obviously changed to now it's 120. I would say this, you can just move this trend line right here and say 120.90. So as long as we're above that, now we have to be bullish because we're above that trend line. And as we were just saying, that if the market just continues to run higher and we go parabolic like we're going, you have, the dollar is going to be, Steve, did you use the term the sacrificial lamb? No, that was Dale. It will be the sacrificial lamb. And, as I think David Hunter was just saying, yeah, maybe it could go, the dollar index could go to 85 or 82. And I'm like, wow, that's a big call. But if stocks are going there, if stocks continue to go parabolic, the dollar is is going to be the one that suffers in the near term. So, the dollar index, or the euro, excuse me, we're looking at 121.50 as being the resistance. Okay. It is bullish now that we're above that trend line. As long as we stay above this blue trend line, we have to imagine that we are going to eventually test these highs now. Cable. So this is a lagger, obviously. Above 129.75, it turns bullish. Or excuse me, 39. This is key. And support is right here. Make that a different color. Support is 139.25. Aussie. So we still have a head and shoulder pattern. We can't ignore the fact that we still have a head and shoulder pattern. If we break above, well, now let's just look at this number here. I'm going to write down two numbers, 78.20 and 78.50. We break above those. And I have to say, I think they're going to have to eventually break, because if you look at the Kiwi looks a lot different than the Aussie. So, it's still range bound though. And we have held well, I'm just going to write down 77 and a quarter now. I think it's got to eventually give way. If stocks continue to race higher, it's got to eventually give. But that still is a head and shoulder pattern. Don't ignore that. You can't. Like, you can't be bullish or bearish right now. Or excuse me, bullish. You can't be bullish without us above that shoulder. But if you look at like the Kiwi, we're just going to extend lines just like we did with the euro. We'll do this, do that, right? So support will be 71.90. Resistance be at the top of this channel. Should be 73. I'm going to keep it in range because, you know, obviously with the Aussie just kind of lacking too, you know, but dollar Canadian. So dollar Canadian is, and just hit the 127% extension. While we're below, let me do this. While we're below 123.70, you have to remain bearish. We just hit the 127% extension, which is 122.82. Okay. And the next support after that is 121.79. I mean, it just is. Oh, Alex said, oh, it is switched. Thank you. Usually Stelios catches that, but he's got other things happening this morning. I know that's why he was out earlier.
He's a slacker. Be honest.
He might be a slacker. Dollar Swiss. So we talked about the 200-day moving average as being support yesterday, and it did support. I mean, look at where we hit the 200-day moving average, and we basically stopped there. We're on it again today, but you know, we have to imagine that we can now. It should open up with the euro breaking out. With, you know, I mean, dollar yen's ripping, or has been ripping. You know, with yields. That's one thing David said, and I don't know if I agree with this. Steve, is he said that he thinks that 10-year yield is going to go to zero. I don't know if
it's not going to be easy, but you know, I find it impossible to refute any decent argument about it because of one reason, and I've talked about it multiple times in the past.
Yeah.
This market, the treasury market, and the vast majority of government bond markets, they're not markets anymore. You know what I mean?
Yeah. Yeah.
I mean, when we know officially that the Fed has bought 84% of all the issuance this year, how does this still apply to the definition of an actual market?
Yeah. Yeah. That's, I mean, very true, right? And so that's where.
So within that context, you know, is it impossible? No, it isn't.
Yeah. That I hear what you're saying. Okay. I'm sorry. I'm just trying. I was going to wrap this up, but yeah. So it's not. And you know what? If let's say, okay, let's step back for a second. Then I'll finish this analysis. Let's say stocks start to, you know, we peak at, let's just say we race up to 4,800 in the S&P, and then we start to reverse hard, right?
Mhm.
So let's say stock market, drops, I don't know, whatever it is, drops down to 4,000. And then, economic data starts to weaken a little bit. And then the Fed, does some sort of QE, and, they maybe spice up their bond purchases. They change them around. They increase the amounts or whatever. Yields can go back to zero, but then at some point the Fed's hands are going to be tied, without going to negative rates. So, I mean, I could see it happening, especially if things turn sour quickly, right? So,
Yeah.
yeah. So anyway, I'm going to go ahead and write this down. 835 is on. And Steve, beautiful call on the U.S. dollar, Norwegian krona.
It's been my baby.
Yeah, thank goodness. Thank goodness it is, because it just continues to work for you. 809 is the 161% extension of this move. That's the range extension, which will be right here. So you can see it right here. So 161% extension of that last range move higher will be at 809. This one, we are already past the 161% extension, right? So 809. And here's the dollar mex, continuing to hold up really well, surprisingly well. Resistance at 2025, and support is going to be, I'm just going to write down support as being 1978. And like I said, I'm long Euromex. I'm out of my dollar Mexican peso exposure now. So, because with as weak as, or as strong as the commodity currencies are at the moment, I'd rather be on the safe side and just not have any exposure there. So 1978, or a cross rate, not against the dollar is what I meant to say. 2026, and we're going to keep this one in range, like the Aussie dollar for now. Dollar index. So the dollar index, we're in a, obviously bearish channel. That means resistance 90.90, support going to be the 78% retracement now, which obviously in the channel we can continue lower, but I'm going to write down 90 20, 90 15, sorry. That is not my kid, by the way.
I know, I just asked them to be quiet.
Did you really? It's a look, I feel for you. I feel for you because, I can't imagine going through COVID with a young child. Like, my kids are teenagers, and they, I could say, shut the hell up, and they'll shut up for like 3 days.
Yeah.
But, having a toddler,
Yeah. He wants to cooperate, but like,
of course, but he's a kid.
like 2 minutes afterwards, he has forgotten.
Right, of course. I mean, what do you expect? I mean,
Exactly.
retracements here, support for the dollar yen. And remember, all the yen pairs are moving right now, guys. So I'm just going to write down 108.50. I don't have any feeling for the yen, but I mean, you got the euro yen breaking out, you got the Canadian yen breaking out. I mean, even the guppies trying. So S&P. So where do we go from here? Like I said, I think I have to jump in the camp with Steve. We are, going parabolic. We're in the process of it. That doesn't mean it's going to happen today. We're just in the process of it. So just, I know there are people that are in our chat room that you guys are listening in right now. That the implication is, hey, I want to short these markets, or the gut instinct is, I understand, because the problem with traders, and this is my problem as well, is that we have this belief, which is true, that markets are range bound 80 some odd percent of the time. This is true. We happen to be in that 20% of the time right now where the markets are exploding. And so we have to be cognizant of that and just kind of get out of the way, or just be careful when you're fading. If you decide to take a counter trend trade, make it quick, make it small, and make it painless if you get stopped out. You know what I mean? And so those of you that are like, okay, I want to fade the S&P because it is getting to the 161% extension up here at 42.46. Great. Take a shot at it, put in a five point stop, and then, and if you're wrong, just get out and move along. So you just have to be very nimble and very careful, because if we do go in an accelerated movement, God, I just hope that happens, Steve. I can't tell you how excited I'd be.
Me too. I just want this
madness to be over.
Period of extremely annoying market conditions to be over one way or the other.
Yeah, I mean, please, for God's sake, it's maddening. It is absolutely maddening,
Yeah, it is.
All right, 41.70 is support, then 41.10. So I'm going to write that down. 41.10. 41.70 is near-term support. We are above the 261% extension of this move, guys. So now, if you're just looking at trend line resistance here, that takes us to 42.35 roughly. And we're just skating across the top of it. So why can't we go up there? It's obviously still bullish. And while we're above 41.10, it's bullish. Gold and silver not acting super well, at least wasn't. I stopped looking at it as I came back and focused on this. But gold, silver is fine. I'll just stop here. So silver, 25.60. I know we had written that down yesterday, so I'll continue right. 25.60 and 26.80. You guys know that that's what I consider range top, right? Yeah, and it's actually probably right there at 26.50, but you can give it a little bit more than that, in my opinion. Yeah. Gold. That move today was kind of surprising. I didn't expect that this morning, but maybe it's the yen, the weakness of the yen, weighing on this. Who knows? So support 1760. Looks like euro just broke a little triangle support. Resistance 1790. And then Bitcoin is, I'm going to say, man, Bitcoin is like the redheaded stepchild of the, I heard somebody on, just because I was listening to CNBC, waiting for the FOMC to happen, or to see if they were going to turn over to Jay Powell. And and I have no idea who it was because I was just listening to it. I don't watch. I never, almost like 95% of the time when I'm listening to CNBC, it's just listening. I'm not watching it. I'm just listening to it, and it's in the background. But I heard the guy say Bitcoin is like it's like your grandpa's cryptocurrency. And I was like, that's a great analogy. You know, all the crypto people, all the youngsters are, you know, even Dogecoin would be, you know, your grandpa's crypto. I mean, this is now fast forward in the stock market. This is like the General Electrics of cryptocurrency, right?
I like the analogy.
Yeah, I mean that's kind
Yeah,
of what it is.
although people should really hope that it doesn't have the ending of General Electric. And yes,
Right.
I'm fully aware that General Electric has not gone bankrupt or whatever, but the only thing somebody needs to do is pull up a long-term chart and they will realize what I'm talking about.
Yeah, right. And that's the thing that, you know, you have to think about it. I mean, this may be your grandpa's cryptocurrency now, but it also means that it has some implications if it really starts to, you know, move, just like, you know, GE did in years past, and
Yeah,
WorldCom, and you know, you think about things like that. Anyway, so I'll write down the same numbers that I wrote down yesterday: 51K and then 56K. All right, and we're in a range currently. And so there you go. All right, guys, the bias chart's done. I don't know if Stelios is back, but Stelios, welcome back. Steve,
I'm here.
Okay, great.
Here's the slacker.
There he is. I'm going to leave it to you guys because I am going to. I've talked way too much, but maybe we can talk about how you know, how you guys feel about the current environment. So I'm going to let you guys go. I'm going to run to the restroom. So talk to you guys.
Run, Forrest, run.
Run, Forrest, run. Yes, so I missed FA.C.E. Sorry, guys.
Nothing to worry about, mate.
Yes, let me just put the bias chart on the chat room, and 1, 2, 3, go. Okay. So I don't know how much you talked about J. Powell yesterday and the Fed.
No, we didn't focus that much on specifics. We just focused more on the market's post-Fed reaction, which was what I was talking about, that if the market doesn't get any surprise, it will now be freed to move in the direction it was, it was moving prior to that, meaning dollar lower, and equity markets higher.
Yeah, and no, you're right. And Powell basically didn't give us anything new, but he did say, you know, we're a long way away from tapering, and you know, employment is still not full, and all that. And I'm like, come on, look at inflation. Look at you know, I'm not talking about asset price inflation. I'm talking about regular inflation. Obviously, not the way you measure it, but look at everything. It's just, you're going to be too late. We've been saying this, and he just continues to be a dove. And frankly, I'm amazed that he's turned so much from the first weeks, months of his tenure, and it just shows, you know, they're just not going to budge, and the dollar is going to keep going lower, and end of story, which is a shame, but you know, it is what
then
it
we
is.
talked with Blake about the possibility of these type of markets, you know, creating a parabolic acceleration to the upside, since they simply refuse to turn lower, right?
Low of top, yeah, exactly. We've seen this so many times before. I think I think you're right. That's what's probably going to happen. The question is, what do yields do? Because you have the 10-year now going towards 170. And
by the way, we talked about that the previous days, that it looked to me that probably, you know, we've finished with this minor corrective move, because, you know, it was minor, right, and very orderly. So 10 years seems to be breaking higher. I think the 10-year was in essence also like somewhat consolidating ahead of the Fed. And, you know, once investors saw that, you know, there is no intention to address inflation or, you know, any of the other issues, you know, they feel more freely to sell, you know, bonds. That's why we have this move higher in the yield, which of course, the first thing it spills over to, having to do with the financial markets, is the USD yen. So, the chances that we've seen now the low of this correction in the USD yen have substantially increased. So we might be on our way to new highs in USD yen, as simple as that. Which means that in general, yen pairs should continue to be well bid.
Yep. I don't disagree with that. Interestingly, we're seeing metals getting sold, and some people are saying, Paulie says it's probably because of the yields going higher. I mean, it's just the same, every asset, every commodity going to the roof, and they're trying to keep, they are trying to keep metals down. For the moment, they are.
Speaking of which, and since I know I'm going to be asked for it, I think the technically more appealing metal at the moment, if you ask me, is platinum. Because platinum seems to be about to break through this formation, which brings us to the scenario I kept saying that looks like a likely scenario to unfold. One more move lower before we see higher prices, and clearly the rest are going to be doing the same. Now, I would put one exception here, and that would be Palladium. Palladium
the monster that is Palladium.
Yeah, the monster that is Palladium, indeed. And someone can even say the monster that is copper, although copper is negative on the day despite being positive on the day earlier on.
It's basically fulfilled the
first target, yeah.
Right? Yeah.
Yes. Yeah. So the rest of the metals, silver, gold, platinum, they seem to want to roll over, which of course keeps them in within the longer term corrective formation. Now, I haven't changed, and I don't intend to change my mind unless I see many unexpected things. I haven't changed my mind about metals being in a long-term uptrend. But as we had said multiple times, there was still no concrete evidence that the corrective move that we've seen in this uptrend is over, and it likely isn't, right? So if we see today and tomorrow continuing this move lower, I wouldn't be surprised to see another leg lower for gold, silver, platinum before the uptrend resumes. And I've explained why I think the uptrend is going to resume, because sooner rather than later, people are going to realize, first of all, that the appreciation in yields in nominal terms is minor in comparison to the actual inflation increase. And secondarily, even the non-believers are going to realize that one thing the Fed has been honest about is that it's unwilling to do something until things become really bad. So the market is still pricing in the possibility of a hawkish reaction from the Fed. If, for example, we see this first quarter inflation persisting, I believe they won't do it. So once the market comes to terms with this reality, I think that's when we see the next big leg higher in metals.
Yes. Yeah. I cannot disagree. Actually, can you have a look at the Bund again? Because
Absolutely.
I'm short and it's been taken down along with treasuries. Obviously, I think it's getting towards a really big level now.
I think it's actually just breaking down, Stelio, from its recent consolidation. So I think there's more to go.
Yeah.
I think this now, first of all, a very bearish consolidation. I mean, a consolidation that was so bearish.
That's creeping lower.
that was dripping lower even while consolidating, right? I think this breakdown that we see here clearly opens the door for the next downside objective. That low at 167.50 and a little bit lower probably, which is the channel of this long-term consolidation of this huge uptrend, right? Because don't forget, we're in a huge uptrend, and we've been since we topped out in summer of 2019. We've been oscillating within this large channel. So I see no reason why this breakdown wouldn't point to an attack of this channel's trend line support. I think most likely that's where we're headed. So towards 167, more or less. So this looks like a very beautiful bearish formation, and we're just breaking down from it. So if I was you, I would still be holding happy and content with what's happening. I wouldn't be rushing to get rid of this position.
Yeah, I've stuck with that for a while now, and I'm.
I think you did
seems
very
to be
well.
breaking, so I'm not doing
Yeah,
anything.
I think you did very well. Treasuries even more bearish than the Bund. I mean, in comparison, yeah, the recent price action treasuries have been holding up better, but the move lower from the high has been, quite different because we've accelerated towards the end. And, this rebound higher that we've had seems to be more or less over. I'm also monitoring this trend line support here in the RSI. We seem to be breaking down again. So I wouldn't be surprised if this is the phase that the treasuries accelerate to the downside once again. Now, I've explained the other day why people should not confuse another leg higher in nominal rates with a possible dollar strengthening, and a very, very good example and proof of what I've been saying. Just look at the price action we've had during the past 24 hours. Here are yields breaking higher, and the dollar is extremely weak and remains extremely weak, right? So you see that the dollar has been moving lower as the yields were just consolidating, and the past 5 days have been moving higher. So yeah, of course, I'm not implying that an inverse correlation will persist forever, but I'm saying that don't find it unlikely that yields can keep creeping higher while the dollar remains under pressure and, either depreciates, albeit in a slower manner, or rebounds, but in a very, very corrective manner. So, yeah, we can see days that the yields are moving decently higher, the dollar appreciating, but I don't think it's going to be in a spectacular fashion. I think the only thing that can trigger some good dollar buying, some decent dollar buying, is some real risk-off environment, and I don't see something like that around, right? So unless we get something like that, I wouldn't be holding my hopes high that we would be seeing a big move higher in the dollar. I think whatever move higher we see on occasion from the dollar is going to be, a rather weak one. Platinum flashed. Okay, let me have a look.
It's going to be a transitory move, right?
Yeah, platinum flashed. Yeah, of course. Platinum flashed. Indeed, it seems to be breaking down from this formation. As I said, this formation looked, corrective in nature, which implied one more leg lower. So I think there is a very good chance we're going to see platinum moving towards 1040 during the next few days / weeks. But I am a firm believer that platinum is headed much, much higher. So, any corrective move lower, I think it's a great buying opportunity because there is a lot more to go to the upside having to do with platinum. Having to do with copper, somebody's asking, listen, copper has found resistance here at the 127% extension of this triangle. It's not easy for me to advocate that somebody should be buying copper after such a massive move higher during the past year, right? Very frequently, I've explained how triangles are terminal moves. So, copper remains bullish until proven otherwise, but I think it's very late to join this trend. So I would be definitely interested in buying copper because I think anything that has intrinsic value is moving higher. but not yet, not before we see a proper corrective move lower. So until that happens, I think the prudent thing to do is stay sidelined and wait for it. Technically speaking, it has found nice resistance here in 4.5. Kiwis with Alejandro says support resistance switched. Okay, probably Blake wrote. Yeah, okay. So that was addressed to Blake. Now let me see. Was there something else I needed to address? By the way, we've seen during the past what is it, a couple of hours, whatever it is, a reaction higher in the dollar. The dollar earlier was at the lows of the day. It now is attempting to rebound. That's why we see the opposite type of price action in the euro, somewhat of a positive type of price action here in the cable, so on and so forth. Having said that, I've advocated many times, and if you look at the 4-hour chart, here it is, there is also a little bit of a 4-hour candlestick reversal in equities. So we're currently a little bit more than an hour within this 4-hour candlestick, which is an outside black candle. Now, as you see, we get a little bit of a risk off, and then we get dollar getting bid. Do I think that based on not even a half completed 4-hour candlestick, we should be like trying to reverse market positions and try to short equities, buy the dollar, etc.? Obviously not, right? So I mean, based on my type of trading style, this is purely noise, right? So I need at least a daily reversal before I can even go into the conversation of discussing the probability of reversing strong market trends like the ones we had, right? So yes, we're seeing a little bit of a reversal as the US session opens, but I wouldn't pay so much attention to it. Let's see if we get a whole day doing, pointing to that direction, and then tomorrow we can have a different type of discussion, which is still going to be theoretical because a single day lower doesn't make a market reversal. Anyhow, I think I covered more or less what I wanted to say. So go ahead, shoot any questions you might have, and I'll be more than happy to address them. Let me see. A look at GDX. Yeah, absolutely. Oh, had I plotted it here? Let me see. Huh. Where the hell did the GDX drawings go? That is very weird. Oh, I'm on a 4-hour chart. I just realized what the problem was. I never plot things like that on a 4-hour chart. That's why they're on the daily. Okay, so GDX. We've had this move higher from the channel. Let me extend it. So we've had this move higher within this channel, and now we seem to be attempting to break down within the channel, right? That's obviously not going to be a pretty technical development. Now, when a corrective formation unfolds, as I've explained multiple times, it's not very easy to know in advance exactly the way it will unfold. So somebody can claim that the channel looks a little bit different, based on how things go. Of course, the other one looked better, to be honest. So I'm sticking with it until proven otherwise, right? So here it is. It passes from more points here, of resistance. And this one passes from more points of support, as you see. We had a little bit of an overthrow here, but this, to me, looks the better technical channel. This, the one I currently have here. So, things are very simple where we currently stand. We find support where we currently are, fine and good. We don't, and we go back within the channel. That was a false break higher. Now, does this invalidate my overall view that the GDX is in some type of a corrective formation before moving substantially higher? No, it won't. It just means that this was not the the start of this new leg higher, as simple as that. And that's why I've said multiple times that investing in things like GDX, etc., I'm only willing to do that to buy and hold, right? Because I'm a firm believer of the long-term thesis. So personally, when I'm buying GDX or gold or silver or whatever, I don't really care if I'm going to find myself out of the money for a period of time, because I'm not at all in doubt if I'm going to make money after a few months, a year, or a couple of years. I'm fine to be patient because I know where they're headed. And because the reasons they're headed where they're headed are as important to the financial markets as gravity is to us humans on Earth. Even if you despise gravity, you cannot just avoid it. I mean, you cannot ignore it because it simply doesn't let you to. So, equivalently important forces like gravity apply to the prices of metals. And it has to do mostly with an amazing devaluation in fiat currencies over time. Right. So I'm not worried about it. I'm not worried about the GDX, gold, or silver. But we drop back within this channel, and then we should be unfolding this corrective move for somewhat longer, right? Now, also what doesn't change is that, in my opinion, this horizontal support resistance area, you can see how important it has been. Roughly, where is it at? Around 31.5, right? Because it's a zone, is extremely important for the trend. So it is a key level for both bulls and bears.
Steve, I have to run, so you can wrap it up. And
absolutely, mate.
If we have
Somebody's
any other
asking
questions,
about
okay.
Bitcoin. Listen, having to do with Bitcoin, I covered it the other day. I think the type of move we had lower is impulsive in nature. So I think that the rebound higher is going to be corrective, and we're going to need at least one more move lower to complete this corrective move in Bitcoin, right? At least. Now the key word is at least. Doesn't mean it's going to be one, but it has to be at least one, if you ask me. Bottom line, I do believe that Bitcoin is going to probably attack the 42,000 zone, an important horizontal support resistance area. I wouldn't even be surprised if it attacked this 30,000 zone, 29 to 30,000 zone, right? So despite the strong reaction higher from the 50% fib of this last leg higher, I don't think we're done. Now, I know somebody can make a good claim here that Ethereum is diverging and Ethereum is actually producing higher highs. I don't think this can last forever. So I do think that Ethereum, sooner rather than later, is also going to have to follow Bitcoin lower for them to have a proper corrective move before they're free to move higher again, if that's what the market wants to do. Yeah, that's it about it. Any more questions, guys, gals? Okay, my pleasure. So, see you all tomorrow for the last day of the week. You're always late to the party, mate. Guild, sure. Nice rejection, which means we stay within this formation for longer, right? We stay for longer. Now, admittedly, first of all, I think there is one more leg higher, most likely, right? Now, there is one bearish interpretation, which I don't think it's the main scenario here. Let me make it clear. I don't think it's the main scenario here for several different reasons, like the inclination, so on and so forth. Now, the bearish case scenario is that this whole thing is a triangle, in which case, you know, we're headed directly lower. But I don't think this is the case. I think we've had a rather impulsive move higher. I think this is part of a consolidation. And I think we should probably see, once we break out from this consolidation, another leg higher. Before then, we can perhaps continue to the downside. This is my main technical scenario about Guild. Okay, the red one, not the blue one, to make it clear. Okay. Okay, guys, gals. See you again tomorrow. What do you think Activision? What do you think of Activision now? Big Cap and Handle, and then Activision. Yeah. Activision Blizzard. It is, if I remember. Yeah, it is ATVI. First of all, this was an easy and beautiful trade. There's your GDX. There you go. There's your GDX. I'm saying that because, as you see, this is a very similar formation. We find it so frequently in the markets, right? So, beautiful breakout from, I mean, textbook corrective move, right? Textbook. Can't get better than this. It's perfect. Nice impulsive move higher once again. Now, two scenarios here. Main case scenario is this one. Because your main case scenario should always be in the direction of the trend. Alternative scenario is some kind of a rather ugly head and shoulders formation there. But in order for anything like that to come in play, we need to break through this trend line support, right? Which currently passes from, what is it, like 89, just below 90, let's say. Okay. That's what I think about Activision Blizzard. Now, having to do with cap and handle. Oh, you mean about this big cap and handle formation there, right? Yeah, we're certainly far away from a completion of its target. Far away from a completion of its target, right? I mean, where is its target? 133. So this fits with what I told you, that, you know, your main case scenario should be a symmetrical triangle here that's going to be resolved to the upside, right? Because yes, we still have upside targets to fulfill here in Activision Blizzard. I have no idea how many active subscribers does World of Warcraft have now. How much do they make from it? There you go. Okay. So it remains bullish until proven otherwise. In these markets, you should always have this approach. Whenever you have a clean and clear trend, you should never psych yourself into believing that the main case scenario is the reversal scenario. You should always keep your main thesis is that the main case scenario is the one that favors a continuation of the trend. Now, if you do that, will you always be right? No, you won't always be right. Will you be right more times than you're wrong? Yes, you will be more often right than you're wrong. And that's all you can hope for as a trader, that you are in the right side of the market more frequently than you're on the wrong side of the market. Because once you do that, there is only one thing keeping you away from making profits in the markets, and that is applying proper risk reward. if you don't fight the trend, and whenever there is a clear trend, you remain in the side of the trend until proven otherwise, and you apply proper risk reward management, there is absolutely no chance that you will not be making money over time, right? I mean, there will be periods that you will be losing money, as always the case, but overall, you will be making money, right? So these are the two main secrets. So the main ingredient is recognizing wherever there is a trend, because there is another problem that people lose money with. They focus in shorter term time frames, and that makes them frequently believe that there are trends where there are no trends. So they treat, in essence, a consolidating market as a trendy market. And then they try to do all the right things, but in the wrong market. So once you identify a trend, which needs a top-down analysis, then the only thing you have to do is shut off, mute the little voice in you that tells you that when something has gone up, it has to go lower. And when something has gone down, it has to go higher. Because it's actually the opposite, right? Trends, once they establish themselves, persist more than people would believe. And then apply proper risk reward management and you're good to go. Okay, bye-bye. See you tomorrow.